Hi, this is Elizabeth Dawson, and we're talking about successful retirement tips. So we're going to talk about the risk of interest rates. Think about this, because years ago, and this might be you right now too, that we get a little bit more safe when it comes to our money, and we actually want to put it into secure pieces. So think about where those secure pieces might be. It might be bonds, it could be the treasury, it could be even CDs at a bank. We have interest rate risk there because where are interest rates right now? They've come to an all-time low for us in the last 30 years pretty much. And what kind of money can we get on our money? So a few months back, we thought we could get at least a 2% CD for 10 years. Now a 2% CD for 10 years is going for far less. So look at what the Treasury is doing. Look at what's happening to bond prices, and it's actually making those bond prices a little bit more volatile, because if you're looking for income, we need to have a good interest rate so we can have good consistent income. So back in the late 90s, you could actually get an interest rate in your money market account for about 6.5%. Today in your money market, you might be lucky if you can get 1%. So there was a strategy that we had used in the past about even bonds or even CDs, better yet. So think about this. If we're back in the late 90s and we could actually get even a CD at 6%, that means that they would have had income off of $1 million of $60,000 per year. Well, that's kind of nice, but interest rates change, right? So let's say in that same CD today, we could only get maybe 1.5%. Well, how much income can we get off that $1 million now? If it's 1%, 10,000 bucks. Am I a millionaire or a $10,000 heir? So it's really in the concept. We might be very afraid of dipping into our principal, but in times like these, we might have to. So that interest rate risk is very, very apparent today. And we have to plan for that not only today, but also in the future, because in 15, 20 years ahead, when that were to happen again and interest rates start to come lower and lower, is that going to affect your ability to have the income and cash flow that you want in retirement if you're basing it on bonds, money markets, and also CDs, those types of interest rate vehicles that produce that income? So think about these things that I'm telling you, and hopefully, you can have a better successful retirement, and there'll be more tips to come in the future. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.